Can you see my screen?
Yes, I can.
All right. So
Let me do something real quick. Let me take control of your screen,
yeah, sure.
and I'm going to draw on it exactly. So we're here. X marks the spot. We are outside of an extreme. So this is value, right? This is that auction that happened overnight where orders were paired. And what you should expect when you're coming in through the extremes here is, like you just said, you should see large orders on the bid. You said 400 and what, 150?
It's like 123 something.
123, okay.
Like 120
and those are going to be away from the market, right? So along with the bids, the limit orders, what you should also see, in addition to this, you should see large sales come in. So heavy selling. So let's say there is 400 on the bid to buy, but you also want to see actual tape reading, time and sales.
Yeah.
What's the average volume on this thing? 3,000? Anything above like 3,000 probably, right?
I wasn't looking at that, to be honest with you.
Okay. Well,
because I couldn't keep track of both the time of sales and tape. I'm practicing on that.
Okay. But what you want to do is you want to see maybe a 3,000 sale into the lows. Okay. And then what you want to see, just because you have this sale is fine. But now what we want to see is the actual price reject going lower and start trading higher. So those 400 and that 123 that was on the bid, don't cancel. And the 3,000 that actually sold through, that was basically the flush. And so now you have the trap right here.
Right.
And so you'll see this trap, this little wick right here is where the trap is played. And notice how it just ekes out right outside of that edge that you drew.
Right.
So as soon as you see that the 400 and the 150 weren't filled, but you also see an aggressive seller.
Oh, I see what you mean. So what you're saying is that if the 400 didn't get filled on the time and sales.
But you saw the 3,000 sold, right? Yeah. But you didn't see the buy.
I didn't see the buy.
Right. So you see the sold, but the sold, the price didn't continue on the large sale. It reversed.
Right.
That's your clue right there to buy here. To buy. Okay. And then when you see, and then up here, you should see, let's say it's another 3,000 or 2,500 or something like that. That's when you should buy again. Okay. Then you let it go.
So you get tier 1 and tier 2.
Yes.
Okay.
This move here is only enough to get a tier 1, tier 2.
Ready?
Yep. Sure.
So I'm looking at June 29th. Right. So let's see.
Okay, so I see 10,000 that sold at 21.
Okay.
So let's keep track of the big numbers.
21.
Okay, so we have 21. So the market will want to trade back to that 10,000 because the market will want to see if that 10,000 has another 10,000 or 20 or 30,000.
Seller or buyer?
Either.
Why?
The market is going to auction back to 21 at some point.
Okay.
Try to see if that seller at 10,000 of 10,000 near at 21 will show up again and have more size.
So is that the concept of completed auction versus incomplete auction?
That's the auctioning process, yes.
Okay.
So once it completes the auction lower, it's going to start to trade back to 21. And you have to write, so I would write down, look, here's another one, 2061, there's 10,000.
Okay. But that's a buy.
I know.
Doesn't matter, huh?
It doesn't matter.
Okay.
2059, there's another 10,000. So times 2. Right? So I would have this in the notes.
And look at this here, 17,000 at 53, 10,000 at 59.
Yeah, so there's there's about 4 big trades down here. That's going to give you the extreme lows. So you have your highs of 21s, your lows of 2061. Now we're going to wait, see how it comes down beneath. Here it goes. Do you see it? Here's a large 18,000 that came through. So obviously there's no trade. So because this, because TD Ameritrade and everything else, honestly, erases the time and sales, you have to keep track of that somehow.
Got it. Okay.
Okay. Because trust me, 2061 is going to mean something.
Yeah.
Today,
So here's another.
21.
Here's 8,000 2018.
Okay. And we have to go really old school on tape reading.
Right there, you see it at 11.
Okay. So let's write them down. I've got 21. I have 2061. And so this is what you're doing for the first hour.
Okay.
You're looking to find out where the big players are putting on their trades, what prices. That's 2033.
8,000 at 2010.
Yep.
See, like 8,000 at 2010, but didn't go further. It turned around.
On the way up to 2010, your first trade too is 2033. Because there was 18,000 shares there at 2033.
Here, I see that. Right
and we're right there. See how we're going to bounce around at 2033? See that?
Yes, of course.
That's not there's a reason why it stalls there. So on our little notepad, we have those levels. We have 2033, pause it for a second. We have 21 up here. We have 2061 up here. Okay. Then we have below, we have 2010 down here. Okay.
Right.
Right.
So there we had 8,000 2010. Yeah.
Okay. So and price rejected it. So that was a sale. See how that 8,000 for sale down there?
Right.
Price is actually rejected and went up. That is a trigger for a trade.
Okay, so hang on. This is the most important thing. So I see this 8,000.
Yes.
And the next sell I see is a higher price, large volume. That tells me that this price got rejected.
Right.
Got it.
And so therefore, your quick scalp trade, this is a scalp, but it's a long back to 33.
33. Got it.
And then you're out of your long at 33.
Okay.
Because you're most likely going to see at least a 50% retracement. And you'll find in this tape here, 25s, 22s, 25, 22, 26, somewhere down in here, it's going to sit there and just range like this. Okay. Before it continues in either direction.
Got it.
All right.
Got it. Okay.
So the first hour, that's all you're doing is you're looking for those large trades, and then you're looking for the price reaction to those large trades. The price reaction to the large trade is the trigger.
Okay.
So in other words, again, if at 2010 it sells 8,000, but yet price goes up to 2015, that's a long. Your stop's below 2010. Got it?
Yes.
And your trade is to 2033, where that 18,000 shares were.
Got it.
Make sense?
Yes, of course. Yes,
okay.
of course.
Good. Good. There we go. It's amazing how we just hang around that 33, isn't it?
Interesting. Yeah.
Yeah. So remember that.
Yes.
Really important, because that's why you want to start letting your long trade go at this level. Because if there was a continuation, it would trade above that 33 and start working higher.
Got it.
So now see how it came down to 25?
Yes.
Remember I said 25?
Yes.
Okay, it's going to flirt around there. And if it doesn't now reject and start trading higher, it's going to trade lower again. But again, it's trading around those and to, away from and to the large numbers, the large trades.
Large trades.
That's all the market does, is it's searching for large volume so that it can conduct the business of the institutions.
Tell me, what do you mean by that?
Okay.
Let me stop. Can I stop this for a second?
You bet. Okay, what I mean by that is you and I don't matter a hill of beans. The market is not in business for us.
Sure.
Okay. It's in business to transact. It gets paid for the transactions. So it wants as much transaction, as much volume as it can possibly get. That's why it will auction lower until the volume dries up. And that's outside of the edges of value.
Sure.
Then it'll auction higher and continue higher, 80% probability, until the volume dries up at the opposite end. Then it'll auction back down, and it's always looking for big money. And that 18,000 at 33, I haven't seen them come back in. So if that seller at 33 doesn't come back in, then there becomes an opportunity for the market to go to, the next one was 2061. That will be the next part of the trade. So you will look for a large sale and a rejection to 2061.
Okay, say that one more time.
Okay, so remember, a large trade was up here. I forget the number, but it was at 2061.
Right.
Right. We have our 2010 down here, extremes.
Correct.
We have our 33 right here. And we have a collection of large trades down in here. So
right.
The long, first long is up to 33. And
sure.
What we're looking for is that large 18,000. We're looking to see if there's the market, the market is looking to see if that 18,000 for sale has more large for sale. And
okay.
If it doesn't, it will trade back down to this level where there was a collection of large trades. And then it'll try these guys and say, hey, are you guys going to keep selling or not? Because if not, I've got 2061. I know there's a seller up there.
Uh-huh. So market, as you were saying before, wants most business, and it goes where it gets most business.
That's right. That's exactly right.
So it comes to the 33 to see if this guy is still there or somebody like that is there. If it's not there, it says, okay, let me see what's below me. Buy these guys if they're sellers.
Right.
If there's not, then he knows there's no business here. Let me go to the next level, which is 2061.
That's the auctioning process right there.
That's amazing. Carl.
In a nutshell.
That's amazing. That's awesome. Nobody has this kind of vision. Okay, got it.
Okay. But isn't it simplified though? We spent 15 minutes, the first 18 minutes of the market just looking for large numbers and finding level. Those large numbers are the levels, because the market's going to want to go away from and to large trades.
Where it does most business.
Yes.
Sure. Doesn't give a damn about prices in between where I buy or
it does
you
not.
buy.
Nope.
Got it.
Okay. Cool.
Beautiful.
So that's how you get your first early morning. That's your first early morning initial balance trades. So if you were a 3,000 buyer, I wouldn't buy 3,000, right? I'd be clicking 500 at a time. Bam, bam, bam.
Why?
Because you could hit 3,000 and all of a sudden it just drops to 7 and you're long 3,000. You try doing that 3 times in a row, you're out of the game.
You mean exiting?
No, you'll just get scared out of it.
No, what I'm saying is that you mean selling 500, not buying.
No, I'm sorry. What I'm saying when you're going to get it, if you are a 3,000 lot buyer, I see that you have your quantity here, 3,000.
Right.
The only reason why you would want to have 3,000 there is if you're actually a 10,000 share buyer.
Aha.
If you're a 3,000 share buyer, I want to see you clicking 500 out of 10. So I want to see that quantity at 500 instead of 3,000.
I see. I see.
Because when you get back, because when you get down to these levels down here, remember, it's not going to be to the tick. It's going to be a range of about, say, five prices. And you want to hit 500, get in, 500. And then as it's coming back out, then you want to get your 500 and your 500.
Got it. Got it. Okay. Yeah.
And then your average cost is still in between.
Got it. Yes, of course. I got it.
Okay. And you won't get frozen on actually taking a trade because you're not thinking, oh God, 3,000, man, if I'm down 10 cents, I'm taking a huge hit already.
What would happen if you said if I put in 3,000 all at once to buy, what would happen again?
Trust me, you put in 3,000 in the real market, it's going to go down on you.
Why?
Because you gave the market 3,000. You bought 3,000 at the market. That means you took liquidity away from the market.
Okay.
You didn't add liquidity. You would have to put in a 3,000 limit to add liquidity. But you're buying at market 3,000. You're taking liquidity. So the market is going to take your 3,000 and then it's going to drop beneath your price to find the buyer beneath you. So your 3,000 is not going to stop it on a dime at your price. You're going to first have to take a hit, a negative P&L, before you start making money. So if you sneak in there with 500 at a time, you're not going to be shocking. You're not going to be letting anybody else know that what your real intentions are.
That was one of the most valuable lessons. Fantastic. I always wondered why every time I buy, things drop.
Yes, because you took liquidity away from the market, and the market searches for liquidity.
I see. So in other words, when I buy, I take liquidity away, and the market maker says,
"Yep,
let me see if I can take liquidity rather than."
Because look, if he can shake you out of your 3,000 long, that's an easy liquidity added to the market.
You're a genius, man. You're a genius. Got it.
Where we are, we have 29. We're here. Okay. This is a good buy point. So go ahead and buy 500. So buy ask. Perfect. Okay. And your stop right now, that's 33, right? Your stop, I would use either 29. I would use 29 as your stop. So I would say a couple ticks behind 29 back here is your stop.
Okay.
Yeah. I always give it a couple pennies. There you go. So hard stop there. There you go.
Okay, there we go.
Okay. Okay. So in other words, if you would have done that with 3,000 shares,
sure.
$20, you're like, that's, you can live with that.
Sure.
And you can do that a few times and still be able to make it back and then some, versus going down 300 and then trying to make that all back first before you start making money.
I can buy ask at 35.
Yeah.
Okay. Or if I'm going to go short, I can sell the bid below that area. I just want to see what it does above 33. Okay, we'll put a stop there, and let's see if it takes me out. Um, the stop loss,
Yeah.
Other than your R value,
Okay.
what else do you use to determine the stop loss? Again, same volume criteria?
Well, yes, there was a block trades down here at 29.
Okay, so if there was a big buy at that area,
Yeah.
you put, okay, got it.
Kind of hide behind it.
Got it.
So there's a big block there. So I'm hiding behind it. It's the idea.
Got it.
Okay. Now, before you add to this, we want to start seeing more buys come in.
Okay. This is extremely valuable for me, Kai. You know that? This is,
Oh yeah, this is going to be.
This is exactly what I was looking for.
Yes. So stay behind it. Remember, stay behind that 33. Couple pennies behind 33.
Okay.
Okay, now we have new information, 41. So now you can stay a couple, I would go behind, I'd say maybe 37. 37, 36. Okay. 50. Now you have 50. You can hide behind 50. Say 46 now. So drag your stop up. Mm-hmm. Here we go. Okay. Okay. There's a seller at 58. Now you can hide a couple. There you go. 54 is fine. 55. There you go.
We had someone at 62. Or was it 63 or something like that?
Okay, here we go, 72. So now you can hide, say, 68 or 72, 68. Yes, about 68 now. It'd be 68, 67. And this is when I would piece it out. I would say 500 at 68.
Okay.
And then another 500 beneath that last spot.
Why?
Because what I'm trying to do is you're trying to get as much as you can. So as it's going up, you want to let go. Coming up into that 21, you want to let go of that 500. Because you never know if this is going to be a 2-point move or a 1-point move, right? And when you have 1,000 on, you want to take $200 and put it in your pocket.
Okay.
So 72 is our last big buy. Yeah, I just start following it up. I'd follow 500 up tightly.
So you trail stop it.
I trail stop half of my position.
And then the other half you don't do it because you want.
No, I just have it a little further back.
I see.
Just for the biggest move.
Okay, so just so that okay, I see what you mean.
If you can review what we just did there,
yes,
over and over. Look, you only got on 500 to 1,000, right?
Right.
You got to start somewhere. So the more times that you're able to do this, 500 to 1,000, and see positive gains, then you'll be able to. You'll get to a point where you're efficient, and you can really, when you start to see momentum coming in, then you can really get into that 3,000 share position a lot faster.
Yes.
And you're never taking. Remember, we took a first hit of $20. That shouldn't affect anybody. You know what I mean?
Absolutely. Absolutely.
Mentally,
absolutely.
I'm talking about the mental game of this whole thing.
Yes. Yes. This is priceless. This is what I needed. I need to do more. We need to do more of this. This is priceless.
This is it right here.
Yeah.
This is exactly it. So if we could do this over and over and over again, it'll start to make sense.
Well, it already does because when I was looking at the numbers of the time and sales, I saw it, but I didn't know what was supposed to happen.
Right.